Welcome to another episode of That Crazy Triangle Guy. Here we are looking at Bitcoin US dollar index on the 4-hour time frame, and we're focused here on these orange parallel channels pointing up and to the right. There's a group of 4 of them. They are replacing these blue parallel channels. Not actually replacing them, but I have these this set of 2 blue parallel channels that was depicting price action, and as it's played out, I've decided to. I'm not sure. They're very, very similar, but the orange ones have a more shallow slope than slightly more shallow slope than the blue ones, and you can see that since back here, this is where we started with the blue parallel channel, the wick of this candle on the 5th of July. Oh, that's our dumpy dump wick. That sits on the top of this blue parallel channel, and we have the center line of the blue parallel channel right here on this candle wick, and then you have a lot of the price action is following these channels, whether it be the blue one or the orange one. Kind of similarly, we travel up here, we dump down, travel along the center line, dump down to the bottom, travel in the lower portion of the channel, come back up to the top, travel along the top of the channel, these channels here, clearly back down to the center line here, back down to the bottom, back up to the top. It's oscillating in these channels, and here we came out the top. And then, okay, so this is what we covered in the last video. I was looking for us to form this head and shoulders pattern coming down to these 2 X's here with this white line as the neckline of the channel. And you can see we have a shoulder pattern here, a head, and then we did not get this second shoulder, and I got faked out here. I thought at about this point, and when we reached the top of the Gaussian channel, that we would see a rejection and come back down. Well, actually, I with the placement of my X's here, I thought it would happen sooner. But we did come down to this X, forming the neck, the neck between the head and the shoulder, if there was a shoulder, but it really isn't a shoulder. It's like a double-headed. Maybe this is a double-headed monstrosity of some sort. Anyway, so I'm still looking for a scenario where the we come back down and fill this gap around here, around 58 to 60K. Now, and I do believe that we will at least attempt to do that and get a little closer to it. Don't know if the bears are going to be strong enough to do that. Now they really were struggling here. You know, I watched all this on the 5-minute time frame, the hourly time frame, and it was a real battle between the bears and the bulls. Now, also, what was occurring here is all this was going on. There was a lot of I don't remember if it was in this area or prior to it. and I don't want to go over it now, but I just saw a lot of bearish divergence. The RSI wasn't matching up with the price action here. This was really, really exaggerated. And there was a lot of sell pressure. A lot of sell pressure here, but there was so much buy pressure that it was chipping away at the sell pressure, but it could not do it. And we could not even get up to the green line here, 72, around this green line is at 71.8 about. And it's my representation of our the ceiling that we got to break through right here. You can see price action coming up to it here in the 8th of June and here in the 22nd of May. And here in March, 27th of March, and then a couple wicks through it. Otherwise, but that's where I see the ceiling at. And right here, we could not even get up to it. And that's with all, and all this was right here was the Trump Bitcoin pump. So I should have known this is a sell the news, although it really kept pumping into the news. I expected it to dump a lot sooner, but dump we have from that artificial pump there. But what we did do here, you can clearly see that we did come up to the top of the red channel. Here, came down a little bit and then wicked up to it. We zoom in on these 4-hour candles. We had wicks up to it here, 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 here. And arguably it could be, did we come up to the red channel or the blue channel? Or the center, or the this yellow channel once again. You can see that is what we're doing. We came up here in the orange channel, back down through it, came up again, came back down to where are we currently? We're at the bottom of this orange channel. Now I do believe that we are gonna have a little battle here. We're battling with the top of the Gaussian channel represented by the green dashed line here. And I do believe these are 4-hour candles and we're dipping into it on the 4-hour time frame. We do not have a complete candle body in there, but we do have candle bodies that are dipping into it on three 4-hour time frames. And we've got about 40 minutes left before this one closes. And hopefully we will close. And I'm saying hopefully because I want us to come down here. I got some cash on the side waiting for 60K. So, and it was hard. It was really, really hard sitting. It's really hard sitting through this move right here. I thought we were forming another head and shoulders right here. So this part was really, really difficult. I felt like FOMOing in so bad and thinking I was going to miss out that we were coming up to here. But you know what saved me? What saved me was my lines that I have here. And I saw us playing out moves. I mean, we came here and you can see we tested the top of the Gaussian channel on this 4-hour candle right here, this wick, on 2 4-hour candles. Tested it for support, came up. Tested this purple line, tested this red line for support. We did all these things. And all these lines, I mean, it looks a mess, but these are all very, significant lines. This purple line held as support here. This purple line is a lower extension of this blue parallel channel, the top of which is here, the center line of which is down here, and the bottom of which is at our this area, which would get us into closing that gap. I think to close the gap, we'd have to come down to 57 something. I don't see us coming down that low, but I see us. We should go to CME futures and see exactly where that gap is. I forget. I think 50 to 59, something like that. Upper 57s. But so yeah, this purple line held as support here. The blue line is the top of this channel and also this red channel. So we are traveling in all these different channels just depending on how you look at it. The red channel, of course, takes into account this dump that we had on the 4th of July, and this lower wick here. Anyway, they all take in various points. That's on the 24th of June. And you can see how price action has traveled in these if you can see through all the various lines. But so what I believe is going to occur, since we got rejected off the top of this red channel or blue channel, whichever one. Now these red channels overlap. I have two different red channels here, and they overlap each other. I have the bottom of this one here, and the top of it there, the bottom of the upper one here, and the top of it there. Which is kind of a weird setup, even for me, but that's just the way I see it. In reality, they are simply a group of smaller channels. You can see that even overlapping them here, like I did here, if you just draw another line there, and if I added one more line here, they would just be a set of smaller channels, similar to those orange channels that are heading upwards more directly. So now that I've explained that, it makes more sense to me as well. So the other thing I want to point out here is this major orange channel here. This one right here, it's pointing downwards. The top of the orange channel is here. The bottom of the orange channel is there. And there is also this red channel that I've superimposed on top of the orange channel. So we have this set of channels, the red one and the orange one, and they both depict this bull flag. The red one gets this high here, and a lot of the price action here. But then we also wick up. The orange one gets the very, very tippy top of the price action is all. And here, see, this was the real scary part because we did break out of this orange channel. And I was really kind of getting nervous that I might be missing out of this big explosion. But I knew we had these other tops of these channels above us. And so I just watched and waited, because really, what's the difference if you FOMO in here at about 69K or 70K, if it, in the grand scheme of things, you're talking $3,000 when there's the potential that we do come down from 70K all the way down to 60K. And plus I already have a position, so I just held my stance here, and then we did. I saw we were struggling with the blue line here, and didn't even quite come up all the way to the red line now. Arguably, well, I'm not going to argue anything. So, the fact that we could not clear and hold the top of this orange channel as support, or the tops of these other channels, leads me to believe that we will at least come down to the center lines of those channels, and possibly all the way down to the bottoms of those channels, for the reason that that's what we've done. Well, this blue channel here is part of the blue channel group, so there are other channels above and below it. So let me just do this, and you can see a little bit more clearly the price action within the red channel here. We came down to the bottom of the red channels. This is the group of red channels here, and then traveled up through it all the way up to the top here. Came down to the center line here, back up to the top here, back down to the center line, back down to these lower areas, back up to the top, back to the center line, back to the top, came through the center line here. We are struggling along this portion of the red channel here, and I'm expecting, since we do have these candle bodies closing right along the blue channel, top of the blue channel, that we at least come down to the center line of the blue channel here. And more probably we do come all the way down to the mean band of the Gaussian channel right here. Not really certain where exactly we'll hit, because, well, what I propose that we'll hit before the FOMC meeting is, we'll put a little heart. How about that? Place a little heart right, let's see. Here. A little red heart, how's that? And that is at the base of this final channel that I just added, the orange channel, and the mean band of the Gaussian channel. That is at about 63.5, 63.4, 63.5. I think we'll hit that before heading into the FOMC meeting, and that could be as far down as we come, but it's only about another $3,000 or $4,000 to get down to. When you're playing with the Gaussian channel, it's hard to say whether you're going to stop at the mean band, come all the way down to the bottom. We do have a reason to come down, and as I'm saying this, let's look at that reason. Well, that's not it, is it? There it is. This is the reason right here. Got to come down. Now, some would say the gap starts here. See, this is where I disagree with all the other bullshit that a lot of. I think someone got it in their head, and that the gap starts right here at the close, and it makes sense that it would be at the close, the previous close to the previous open. But I think that's just been copied and pasted on many articles without any real thought to it, or maybe I'm the one that's thoughtless here, because it does seem kind of logical that way. But if you do that on the, I mean, when you take it down to, well, I guess you're taking it to a daily closing basis to the next day opening basis. But still what you're doing is you're breaking it down to an hourly time frame, or even a minutely 5-minute time frame, because you're going from close to open. And I like to look at it more on a daily time frame of the entire price action of the day. I'm looking at it on a daily basis, not a close to open basis, which would bring it all the way down to like an hourly time frame. It's just it doesn't make it. It's nonsensical to me. Because when you do that on an hourly time frame, you end up with a lot of gaps, and that don't always get filled, and it's I don't know. So to completely fill the gap according to the rules that are set forth, we'd have to come all the way down to 57.8. But a lot of times we don't always we don't always fill gaps. And when we do, we don't always fill them entirely. And I believe the reason for that is because you don't need to look at them on an hourly time frame. And I don't even know where our gap went. Where did our gap go? See, on a daily basis, I just lost it. It's that's because when I switched to an hourly, it went back way too far or something. I don't know what it did. Here's our gap right here. So I believe that the gap starts at 58.7 and goes up to 60, about 67. So there's a $2,000 gap in there. And I think that if possibly we just even come down to the top of this wick the day before, that's probably good enough, which is about 59.8. And I think that's a reasonable I think that's probably where we will come down to, as a matter of fact. I did the wrong thing just now, and well, to get out of it, let's just do this. I meant to hit that button there. So 59.8. $59.8 is right here at this orange dashed line. Now that is significant. It's right around the bottom of the Gaussian channel, and a lot of times when we do come down there, we wick through it a little bit. This orange dashed line is very, very significant because it is the center line of that orange channel. This is the bull flag channel we've been traveling in since February 28th. That's when we entered this channel right here, came up, past the center line to the red channel, came back down to the center line here, a lot of price action around the center line, back up to the top of the red channel. Anyway, I'm not going to go over all this stuff, but back up to the top of the channel, back down to the center line of the channel here, and here on the 4th of July all the way back down to the bottom of the red channel. And since then we've come up, and we've come all the way up to the top of the channel, which is significant because it does show that we're traveling in this channel and not up to the green ceiling here. So naturally it would make sense that we can't just oscillate back down to the orange center line of the channel, or even possibly the red center line here. The red center line's at 58.8, and the other one is at 59.8. What did I say on CME futures? Was it 59? I think it was 59.8, right? Yeah, 59.8, I believe, would satisfy everybody. Oh, we're looking at a 4-hour here, so it looks a little bit weird. Yeah, 59.8. What would 58.8? Yeah, it could be either one. That one happens to be 59.8 right there. Of course, this is in CME futures language, which, well, if we were dumping it, price would probably, be a few $100 within each other. But it's interesting that those are 58.8 and 59.8. So, here we are. These two dashed lines, the red one is at 58.8 and this one's at 59.8. That would satisfy that gap closure. It is the center line of these major channels we've been traveling in since, let's see, March, April, May, June, and July. I just counted it on my fingers. That's 5 months. So that's not even, postulating that we'll come all the way down to the bottom of the channel, which would be about 52. So keep that in mind as well, because if things did get really bad, some sort of black swan event or whatever, that would be probably where we could come down to $52,000 region. Now, all that being said, I think this is the key point here. The CPI data release on Wednesday, August 14th, I believe, and let me check that right now. Yes, here we have the CPI release schedule, and you can see that the July data will be released on August 14th at 8:30 a.m. Eastern Standard Time. And the August data will be released September 11th. So all these dates, the dates are usually around the 10th to the 14th of the month for the previous month. So there you have that. August 14th is the next date. So that's the yellow vertical dashed line there. The pink one is the fuchsia colored one is the FOMC meeting. Now, I don't think the FOMC meeting is going to be very revealing. But I think what the market is waiting for is this data right here to show that inflation is coming down and giving the green light to rate cuts, and probably also absorbing other market data that will be released in the coming weeks to give it a look at the economic future and give the markets more confidence in investing in risk on assets or whatever. So that's how I see that. Now, so we have these dashed red lines. We have the gap here. You know what? Let's take away this circle. I don't think I'm touching this circle. There we go. Let's just delete that if I can. I don't know if I can. You know what? I got other buttons in the way that you can't see. How do I move this? There we go. There, now we can delete that because it'll just get confusing. So I'm just going to make a little circle here. I'm not really sure where. I guess I'll just make this circle like this. That's the fill the gap circle. And you know what? I have to turn my brush off now, which I think I did. Did I? Yep. Oh, good. So, oh, that's really interesting. Can I just hit this little button here and then it would turn my... No, it doesn't. You'd think that would just turn my brush on, but it doesn't. It turns my brush off. Okay, so little red heart is where I think we could come down to. The bears try really, really hard. They could get us to come down here prior to the FOMC meeting. The thing is, there is a lot of buy pressure, and this thing is about to explode. Okay, there's no question about that. Bitcoin is about to explode. Sometime, I think by this date, Wednesday, August 14th, will be the explosion day, if not prior to that. And we're going to see we're going to see a breakout above 72. And up into our white channel here, the most important channel in Bitcoin's history. So the bears are going to try as hard as they can to get down and close this gap. Can they do it? I don't know. Before the FOMC meeting in 2 days, or day and a half, I believe we can get down to this red heart. And that may be as far as we get, down to about 63.5. We may hold that as support, come back up, and follow this orange channel here, come back up, and get a breakout prior to this date. Prior to this date, kind of hang out here and then explode. That's a possibility. And or we could come down here, maybe get some bad world news or economic news that gives the bears enough fuel to push push us down to fill this gap in between the FOMC meeting and the explosion CPI date. Who knows? And we'll just have to watch and see. Like I said at the beginning, this is a real struggle between the bears and the bulls. And I'll leave it at that. So we'll see you next time. Thanks.